would be like, yo, the orders are faster. You're just like, dude.
But it's important. Not to forget.
Let me cover it. We have completely been saying not your keys, not your coins, take your money off exchanges.
But this guy wasn't listening. He just came in here and said the opposite.
No, I'll just say.
Hey, one guy skewed the conversation. Let's not let that take over the entire conversation.
Your complete strength is your complete weakness as well. Like you are, your delivery style gets maximum attention. But at the same time, it's completely polarizing. So it kind of turns it into a debate.
I baited him into promoting CFI.
My bad. I'm just saying that's why you always get a pushback, because at the same time
I hear you.
People.
But but Simon, I might play devil's advocate and kind of make a point on Alex's side. With Richard will hate me for this, but we can't ignore the amount of scams that happened last year in the bull market. On decentralized exchanges. Like for us, for example, we invest in projects that we know are going to list on a centralized exchange. Doesn't guarantee the project is good, but it's less likely to be a scam. People invest in a project that's verified on OpenSea because it's less likely to be a scam. So people delegate the due diligence to those centralized entities because they have a job, they have a life. Yeah. So I think there is a place for centralized entities that this is what happened now is positive to decentralization, but.
I tell you, it's real hard to talk about how good the blue chips are when the blue chips drop 85% and the scams only drop 100%. There ain't a real big difference between 85 and 100. They're kind of similar. So like it's when you're in an industry,
that is one of the problems with our industry is you can end up making more money out of a scam than a legitimate project, and that is I've from being involved in this industry for since 2013 money. Sometimes it completely defies logic, and you can literally, the right decision is often the one that costs you the most amount of money.
Crypto.com's 20% of their balance sheet is SHIB. It's real. It's like, fuck.
Well, the important part
didn't they defend that, saying that was that? Didn't they defend that though, saying that was their user deposit? By the way, shout out to you, Richard. When I saw that, I was laughing so hard.
And Robinhood's like 50% of Robinhood's profit.
It really is true.
No, the important part about that is that
these guys do is promoting the gen coins, because people are on this market for the most part. They're on this market for speculation, and that's the truth. Right, so that's just the point I'm trying to make. Ultimately, there's gonna be enough shit hitting the fan, so everybody will be covered. And at some point, people are gonna make the right choice and trying to find what a real alternative to.
Well, I don't think I don't think the risk-adjusted right choice is Bitcoin. I think being down after waiting 5 years shows you that you can buy this blue chip and you're gonna do worse, not better. I think the math is.
Yeah, but
I think
if you want to look where this is all going, just look at the traditional markets, which is the reality is the emotions of fear and greed that we're plagued by are the same emotions of fear and greed that plague the traditional markets. And in the end, everybody ends up, the vast majority, in the big pockets of money, those that are contributing to their pension, and then the pension, and they outsource the investment decision making. Because the reality of the world is, we're all sat here on Twitter Spaces. We love this industry, and we literally spend day in, day out researching every nook and cranny. But the vast majority of the world, this is just a mechanism. Investing is just a mechanism for trying to get ahead of inflation, and they have other things they care about, which is where the unfortunately it's just a fact of the world. It's why financial advisors exist. It's why the buy side and the sell side exists. It's because that's the vast majority of the world are not going to be day in, day out trying to figure out how to further their finances.
See, that's what's great about crypto, is that everything is just number go up. And so if everything's number go up, you do it with less negative externalities. Uniswap runs without a big building of people. It just runs. Hex runs. Bitcoin kind of runs. You need some miners. But it's less, it's better hours, it's better uptime, it's better security, it's better pseudo-anonymity, and your numbers go up more. And so it's like, if you're not in crypto, the risk-adjusted return in crypto is vastly superior than the stock market. Stocks went up threefold in 14 years. Property went up threefold in around the same time. And crypto went out like 30 million, trillion, billion X, and there's no comparison. So I would love to see crypto kill off all this stupid SoftBank and all this other crap, like people FOMO-tarting stuff that can't even go up. It's all negative externalities, and half of it scams anyway. Just put all that money out of the stock market into crypto. I mean, you've got a huge dip now.
Yeah, guys, can I just mention that there seems to be a scammer out there that says buy Agao, which is my product, KGSU. My product is not for sale for retail, guys. I'm not selling anything here. And just to let you know, we just deal with.
Have you read the library case, my friend?
What?
Have you read the library case?
What's that?
Exactly.
Yeah, cover the library case.
First of all, everybody should be very aware. First of all, did you guys see the class action against FTX US?
No.
A lot of fucking lawyers about to make a lot of fucking money. If you think all the money's being lost by the exchanges themselves, lawyers are going to eat the shit out of a ton of the liquidity from class actions. If one class action gets certified, consider your money going to us lawyers across the US.
Hold on.
And if you,
are you a lawyer? Can you? But isn't Chapter 11 bankruptcy?
Yes, I'm a lawyer.
And it protect class action?
Yes, I'm a lawyer, and I hate class actions.
No, I'm saying isn't Chapter 11 bankruptcy, it protects from class actions, right?
I don't know.
About it does essentially it didn't make the decision. It was a summary judgment adjudication motion that basically said even if you didn't do an ICO, that does not protect you from not being called a security. So I heard somebody saying we don't sell our tokens on exchanges or we don't sell the public. Be careful. If your coins end up on an exchange using both UBO, which is ultimate beneficial ownership, which is how a lot of these coins are going to get smacked. If you also combine that with the Ethereum jurisdiction basis that the SEC tried recently, saying that because 42 or 43% of the Ethereum validators are in the US, that could be the basis for jurisdiction. You combine that with the library case, and if your tokens touch exchanges, period, doesn't make a difference if you got an ICO, an IDO, an IEO, an STO, or anything else you want to call hiding behind your illegal securities that you didn't register, watch out.
So when new lower lows, when price dump? I want my targets to hit already. I'm sick of waiting.
There's another question by the audience. We've got an audience member, Dewey_Wester. If we calculate the shit show we just had, what is the sum of the shit show that is just about to cascade?
I think we're in the hands of lawyers at this stage, actually. I think it's the outcome of the cases. I mean, so Gemini, Genesis, all those are like pretty big players. I think really the ones, I guess the only ones that you'd need to look out for.
We forgot about Plus Token. The Chinese government has like a couple 100,000.
Yeah, that was like 4 billion or something, wasn't it?
I forgot about those guys.
And there was one in India as well, a crazy one.
Bro, at some point, I think Ethereum has to decorrelate because there's too much sell pressure on Bitcoin, and there's just not as much on Ethereum. Like, I think Ethereum will dump harder, but like when it's done dumping, down to Doomville, I think it should decorrelate.
Hey,
Richard, can I ask you a question?
Just shut down withdrawals, by the way.
Gemini.
Can I ask you a
I
question?
just sent it. I'm gonna read. Hold on. I'm gonna read it out. Chet, did you see the message? I don't know if you saw it in the group about Gemini.
Yes.
If you can review it and just confirm it and then just announce it if it's if.
Let me tell you something that I can quickly confirm. I thought I was unmuted. Maybe I was talking to myself. Sorry. I haven't looked at it in the group yet, but something just crossed my wires. Is Binance's founder says he's looking into acquiring Genesis loan book. So that CZ is now looking into acquiring Genesis loan book, and that is according to Blockworks, citing a source familiar with the matter.
We literally heard the same thing a week ago, dude.
No, can I rephrase that?
He doesn't have stomach hands.
No, can I rephrase that? Binance is looking to acquire Gemini's licenses, not their own book.
No, Genesis. We're talking about Genesis, not Gemini.
Yeah.
Wolf?
Yeah, I just wanted to say, Simon, I'm not sure if he was talking about this class action, but the one that I saw that was put in today was against SBF himself, not against FTX, and named Larry David, Tom Brady, Steph Curry, etc., which I think is largely outside of the bankruptcy protection.
So have we got any speculation on what SBF's net worth would be at the moment?
A lot more than zero.
Didn't they say 1 billion?
Well, the vast majority of his net worth was, well, who knows, but that was meant to be the value of his company and his tokens. And so the question is, how much?
In the Bahamas is currently for sale for 40 million. So there you go.
So same as easy?
You're looking at buying it, Kim?
I can't travel to the Bahamas.
So
but...
people tried to come after the CEO of Voyager. And I'm sure they'll do the same with Celsius, but they determined that his net worth wasn't worth the legal fees after this case.
Right,
but
they could have gone after him and basically settled as part of the UCC decision to expedite the process to not go after him. But if they find that he has more assets or that he's lying about them down the road, he's still open to lawsuits.
Yeah, so Shingo, the guy that was really on top of this, he said that a lot of his wealth was siphoned off into a trust structure, and it wasn't his personal net worth, and that actually they started looking at. So when FTX tried to buy Voyager, the holdup. Now this is really interesting thinking about it now. The holdup was because they were trying to the state regulators were disputing the fact that they were trying to get releases. So the purpose of Chapter 11 bankruptcy is for to try and get, Kirkland and Ellis would try and get as many releases as possible, which is why it often ends up in an auction, because you can negotiate into the purchase agreement for the assets that you will waive some of the things like the criminality, well, not criminality, but some of the legal issues. And the hold up on the Voyager case was because the state regulators were objecting, and they wanted to come after the various other things, the criminality side of that. So there was a big negotiation between FTX and Voyager in terms of what releases can you have, what can't you have, and they wanted the right to come after the founder. So that actually caused a delay. And in the delay, this process, FTX actually blew up before it actually. Well, they signed the agreement, so there's some recourse there. But good luck trying to get that recourse. So they're putting it back into the auction process now.
Yeah, but Simon, I think the silver lining there, and I think a lot of people who are Voyager creditors initially were really upset that FTX blew up and that deal wasn't there. But imagine.
Yeah.
If that delay had not happened, FTX had done the deal earlier, and Voyager had already sent their assets to FTX.
Absolutely,
that was the worst case scenario for Voyager creditors. So actually, as painful as it is to have the timeline, I think, reset for Voyager creditors, they should breathe a massive sigh of release that this just didn't fall into the abyss of FTX's assets.
Exactly. Imagine if everyone suddenly jumped from one Chapter 11 to this Chapter 11 disaster. And that just shows you SBF knew what was happening, and yet he was still willing to take 1 million people. He was willing to use creative financing probably leveraged against the token that he printed in order to bring 1 million victims into his scheme. And then they would have all been caught up in this process, all because he was trying to play creative finance from his bad debts, leveraged upon the collateral of an illiquid, illegal security called FTT.
Simon, quick question. You're calling it creative financing. Is that being generous, or is it actually illegal financing?
Yeah, it's a fraud, basically.
Fraud. It's fraud.
Fraud,
If it was so client money. So the FTX.com had client money as a regulated institution. If you touch client money, then that is certainly a fraud and criminal case at that stage.
Got another question
Sorry,
here.
I'm not a lawyer, not legal advice as well.
It goes back to the question that to the topic we're discussing. If I trust centralized exchanges more than I trust myself to keep my keys secure, that's by Hustle Life only. What do you recommend in terms of the safest centralized exchange in the market now? And he's not alone. You remember when FTX collapsed, we saw a few exchanges, including Binance, get a net inflow. So they had more money come in after the FTX collapse, at least in a few days after the collapse. Yeah. So for anyone that doesn't want to use a DEX, doesn't trust doesn't trust having the private keys of a wallet, what centralized exchanges would you recommend, if any?
Well, nobody can recommend an exchange in this side, and nobody should. I wouldn't recommend anyone.
Even if you go to a US, even if you go to a US regulated exchange like Kraken or Coinbase, you still wouldn't recommend those.
I have a question for the room.
The thing is, nobody can recommend anything at this point.
Here's
recommend something, and then the thing goes down.
So just some news to report, for everyone really quickly. Sorry, we do have some reports that there's issues with Gemini overall. Apparently, it looks like it could be an AWS server issue. It's not certain yet. And the official statement that's coming out of Gemini right now is that they're investigating reports of potential service disruptions, but they state that all customer accounts and funds remain completely secure. But that's just
we've heard this before
right now on the situation.
We've heard blaming AWS before.
Real quick though, because Mario had a good question, and there's a lot of people in the room that want to know, and I want to just add on to this because I have this question too, is because I don't recommend anyone to any centralized exchanges at all.
I got the balls to do it.
One second, just add on. But what about like services like Cash App, Venmo, PayPal, where you can buy crypto and custody? Are those trusted? I'm really asking. I've never bought them.
They're no different in
Let me try and take it. So and come with something.
By the way, and afterwards, Richard, did you say you can? I'll let Simon go, and then Richard.
Listen, I got the balls to do it.
Oh, sorry, Simon, I'll let you go.
Limit your risk to any of these centralized exchanges by going in with multiple transactions. You send them 1/10 of what you want to put in. You withdraw it. You send them the next 10th. You withdraw it. You send the next 10th. You withdraw it. They can only screw you for the last 10th. That 10x reduces your risk. Thank you, Richard. You're a genius. True.
It's the word. It's the word exchange.
Before, guys, is when you deal with exchanges, that means you want to transact. So what I would recommend people is the vast majority of your wealth, and I'm talking about treasury, you want to keep it in a multi-sig or in a decentralized or in your own key.
But why?
Let me answer the question.
How are you going to buy the stuff to put in your multi-sig unless you took fiat from the real world, bro?
But then what I'm saying is, when it comes to exchanges, they have a purpose, right? So when it comes to exchanges, as you said, there is off-ramp and all that stuff, and on-ramp. When it comes to exchanges...
Listen, with all due respect, though, there's a whole bunch of people in the room that then Mario asked like a very valid question.
Let me just answer it. Kraken.com, okay? They support anonymity. They have Monero. Still treat them as though they're risky. Do not ever leave money there. You want your money and your crypto to spend the least number of hours possible there. And so when I say you could split your transaction by 10-fold, you could really you could split it up 100-fold if you want and reduce your risk 100-fold. So if you're going from fiat to crypto, spread your transaction. Now just make sure that you don't break the law, because structuring is a money laundering law that you can break. Go Google what structuring is. So if your intent is to stay under some limit to not get caught, that could be illegal. If your intent is that the exchange doesn't screw you, that's probably okay. Check with your lawyer. I'm not a lawyer. So
yeah, again, not financial advice.
Let me try and answer the question, because
and then you
basically
point your fingers towards somewhere, and then if they go bust, then you don't want to be liable. Yeah.
So
I'm here to replace all these guys, but you still have to take your money from your job and get it into crypto somehow. And what are your options? 10% fee at an ATM? Meet some guy in a hallway and he stabs you and takes your money, or take a little bit of risk and send it to Kraken.com. I think that sounds like a better deal. I feel okay with it.
Exactly. Yeah. So let me just try and answer it, because like we've covered it a lot of times, but sometimes people are joining at different stages, so we have to repeat. But the worst place for you to store is an exchange. The reason is a centralized exchange, and the reason is because they have the most attack vectors, and they're there not for custody. They're there because they have to do custody incidentally, but they want you to trade because they make their money through trading fees. And so if they want you to have your money there and you're not trading, it either means that they're doing something with it, or it's just a liability that they don't actually want, but incidentally people start using them for storage. So you should never be storing at an exchange, a centralized exchange. It's just for trading. If you are going to store with a centralized entity, then you want additional legal protection and a company.
Just got another report here. Sorry to break in, but this is obviously due to the Gemini thing. It's pretty important. Gemini says experienced Amazon Web Services outage with one of company's primary databases. They have restored the database and are bringing the exchange back up. We will confirm this once we start seeing any exchange movements happen on chain.
Yeah, whenever you start to see an exchange blame that type of thing, that's normally a warning sign. But
another place. I used to send people to Bitstamp because they don't have margin trading, and so they're less likely to FOMO tard and lose all their money, degenerate on margin trading. So they're necessary
that's a really
evils.
Good point, Richard. Let me. So the conversation around title and custody is important here, right? So look at FTX. FTX say that you must, when you deposit your funds with us, they're held in custody and then you can trade them. But they also have this margin lending book. So officially, when you margin lending, you're actually taking the coins that you had in custody and then you're lending them to somebody else. So this becomes important because some of the funds were on loan, which means you're investing in an illegal security because you're receiving yield. But the rest of it is just in custody, which means that it's not meant to be touched. But once you actually lend it and then what was the process of FTX in making that distinction? And that's probably where the crux of it comes, because some of it was on their margin book, which is where essentially you gave them permission to take your coins and do something with it if it was on the margin book. But it was meant to be peer-to-peer. It wasn't meant to be that they can just take it at will and borrow it from their hedge fund, their Alameda, their hedge fund. So that's where the illegality comes into it. But in order to, the first thing is that there are custodians which will look after your funds for you. And they're meant to be just set up with all of the security protocols, and they will charge you for custody, because storing people's money is not, if they're doing it for free, it's because they've got an alternative business model where they do something for it. If they're just a genuine custodian, then custody costs money. It's why people hate investing.
Who do you recommend that we could trust as custodians then, Simon?
In this environment, I can't really make an individual recommendation. You just want to go and look at the different custodians. But
I guess what I'm saying is there any trusted custodians? Because to me, the custodians look very, I get 100% what you're saying, but to me, they look very similar to the exchanges. I mean, we got Coinbase that has custodian, but you're still, like Richard said, you're giving up so much, and you're giving so much of your privacy up, and so many other things. And can we really?
These are different things.
And
so
also,
if you're
one more thing. Also, doesn't this go exactly against what crypto is about?
Yes.
And shouldn't we be teaching more about self-custody than promoting custodians?
You're changing the subject, right? So what I was trying to do is say, you have the exchange, which is the worst place. If you're going to give up your key and get someone else to store it, then you're looking for the legal protection and the security protection of a custodian, and it will cost you money. And it's why people hate gold, because storing gold is expensive and hard to do on your own. And that's the same with custody. So then you look at, well, what self-custody options? The self-custody options, if you've got a small amount of money, you're probably better taking it off an exchange and downloading an app where it's stored to your phone, and then you would have a passphrase. But what you're doing is you're storing the private key on the device, whether it's your computer or it's your phone. But what you ideally want to do is graduate further, which is when you have a special device, which is a hardware wallet. And then if you've got a lot of wealth on the line and you graduate even further, you start to have more complex setups like multi-key setup. So people tend to go down this path and go bit by bit. But what Richard and everyone is saying is, why don't you go just as soon as you've onboarded through an exchange and then you have crypto, take it out of the exchange and then go straight to the bottom layer is the fastest and most ideal way to do it. But then just remember that you're exchanging one risk for another, which is the question that originally came. What if I don't trust myself to do that? And that's where like hardware wallets try to introduce a bit more of an easier user experience. And everybody can order a hardware wallet and watch a YouTube video on how to actually do that.
But just to summarize something, Alex, Simon, can I add something, Mario?
I was going to give you the mic.
Thank you so much.
Please, I was going to give you the mic.
Thank you so much, brother. I mean, if we go all the way back, once upon a time, Mt. Gox, and we end the story with today Genesis, right? There are three things that centralized exchanges and parties have done poorly, right? Number one was security with Mt. Gox. So really, I would evaluate, if you ever want to trust a centralized provider. Obviously, many people are in disagreement with that. But if you're just scared of Web3 and you think you want to find the right person, number one, I would look at their security. MPC technology, multi-party computation, has been the most reputable. If you had to name a custodian out there, Fireblocks have a really clean track record, and they employ that. They don't use your funds. They have insurance. They're backed by legitimate people. But the second part that we've seen in history is obviously integrity. So it's very important to look at the team, look at the regulations that Simon was talking about, and really ensure that they have the right licenses. Like, for example, if you have a custodian license in Germany, or if you have that right license, you have the regulators supervising you and looking over your back at all times. That's very, very important. And then the most important of all, the bankruptcy issue that we saw, right? So we talked about integrity, we talked about bankruptcy, and we talked about security. In terms of bankruptcy, segregated accounts is absolutely critical, because here's why it's so important, guys. It doesn't make any sense, and this is something that makes me angry when I see centralized exchanges. How can you be the exchange and the custodian at the same time? That's conflict of interest, right? You shouldn't be. There's always been escrows in the past for centralized entities, trusted escrows, hopefully, that will secure the things and not allow you to gate, an entire population, take all the funds, et cetera, et cetera. So I really think that if we really look back from Mt. Gox all the way to Genesis Capital, it's really important that you have your funds segregated at all times. I think really the exchanges need to start realizing that you cannot use your own custody. You have to give that to a third party.
How about just have everything on chain, huh? And how about using multi-sig on-chain escrows instead of having to deal with trusts and escrows?
If you don't trust yourself, or you're not comfortable, I would really suggest learning. Use an exchange for the exact word, exchange. Load money from your bank account, exit to your bank account as soon as possible. Get that on a ledger, on a hard wallet, or on a DEX, and that's the best thing I could recommend. I mean, I would recommend learning.
I don't know about the bank account part, man, because when you look at the fractional reserve system, bank account is not necessarily what you want. I mean, that's the elephant in the room that I keep on repeating.
For beginners, it's very hard.
Well, I mean, look, if 8% of the deposit get withdrawn, like the bank is toast, you know that, right? So, that's the biggest elephant in the room.
Yeah, and when you do banks, you want a trust bank, and I know trust is a strange thing, but trust is the concept of segregated custody where they can't rehypothecate. The problem is that even if you use in the fiat world, even if you set up a trust bank, the system is whereby that trust bank sits on top of a fractional reserve rehypothecated bank. So in the traditional fiat system, the only way to do that is to take on the credit rating of those that are recklessly printing money, like treasuries.
Or just use a credit union, dude.
Yeah. But then even then it's sat in a bank, so you can't fully.
I mean, look, guys. I mean, the entire thing is a Ponzi, right? Because ultimately, you can also just have the paper bill, and then the paper bill is the direct liability to the central bank. But the central bank just can print as much money as they want. So again, that's why crypto is here, though. Crypto is here to replace that system, right?
The end destination, from my perspective, is Bitcoin on a hardware wallet is where most people want to end up.
I wish you said that when Richard was here, then we can have the Bitcoin debate again. It's been a while. Digipol, can you hear me?
By the way, before we switch this thing, if anybody can get Richard back on, so I can find out how the fuck Hex works.
Let's not do that.
Bro, if I do this, Digital, if I do this, I will be murdered. I'll get so much fucking hate.
Please don't.
I'm just gonna say, I think his biggest savior is that his coin isn't on exchanges.
No, I can't hear one more Hex pitch in my life.
Did you, Paul? I know you don't have much time, so I brought you on. You had some insight to share with in terms of your you're a cybersecurity expert, intelligence and forensics, and you did some on-chain analysis for exchanges, correct?
Yes, thank you, Mario. Martin Klein speaking. I'm the CEO of Digipol. My colleagues and I have been listening to all of the spaces in the last few days. We joined as a listener and we have replayed it. So we're, let's say, a little in touch with everything going on. About the FTX and the hacking, it was hacked, it wasn't hacked, and so on.